Well, from a tax perspective, the medium-term budget is always about signals and not definitives on tax. So if you were looking for immediate relief, you might have been a little disappointed. But read between the lines you must, to misquote Master Yoda. If you were looking to Minister Mboweni to bolster your personal finances and your job prospects and the economy as a whole, he would have had to deliver on a few things. Obviously, the revised list of zero-rated VAT items, any plans perhaps on lowering our record-high fuel prices, incentives to stimulate employment and obviously on the broader economy, the infrastructure fund. I'm joined now by Dr. Adrian Saville, the CEO of Cannon Asset Managers, to see how the Minister did on some of these scores. Evening, Adrian.
Evening, Michael. Good to be with you.
Cake flour zero rated. Now you can have your cake and eat it tax-free. Was this a good move?
I really think that that's sort of fiddling at the margins, and it might carry some favour. But in the greater scheme of things, perhaps it plays to a certain part of the market. It has an appeal to some part of the electorate, but it really is fiddling at the margins. When you're spending 5 billion on bailing out SAA and adding another 5 billion for the others. Really, cake flour? I'm not sure that's...
Well, but that was my point. The slap in the face to say we're giving $1 billion or so back via zero rating and then doling out 5 billion to SAA. It speaks one way and walks another. When it comes to personal tax increases, I suppose one can read into this that we don't seem to be in line for any new taxes come February next year.
Certainly that's the talk, and I would be surprised in the absence of any dramatic economic or market event. I think you can probably take confidence from that proposal. To me, though, the real issue is it's not so much that there aren't any tax increases, and we should be relieved for that. It's that the allocation of revenue is, I think, in a word, ineffective. That South Africa's problem is not a shortage of money; it is an inefficiency and ineffectiveness in spending.
And he did point out how much we are spending on the public wage bill in particular. And if you dig through the expanded document, how much we're spending via not necessarily new appointments, but people migrating up the pay scales in the public service and how they're being appointed at a rate that doesn't seem to square with the kind of service delivery that we're experiencing out there. So there's a lot to be said about that. The fuel levy is another interesting...
Just before you go away from there, if you've got a cabinet with 70 members, you would expect some extraordinary results versus China's 25 cabinet ministers. It really beggars belief that there is this disconnect between words and action.
30.2 billion over the medium term is what the public service wage agreement exceeded budgeted baselines by. It really does beg a belief, and 85% of those increases in the wage bill due to higher wages rather than headcount increases, which is back to that earlier point. Now, anyone who might have been looking for relief via a restraint on levies certainly won't be encouraged by what the budget had to say when it came to the road accident fund. It represents a potentially large liability. According to the Minister, the RAF's operational deficit declined to 26 billion from 35 billion, so heading in the right direction. But the key statement was, for me, the RAF will require further large increases to the fuel levy in each of the next 3 years to manage the short-term liabilities. So it looks like fuel prices are going up, absence any huge strengthening in the rand or reduction in the oil price.
Yeah, so I think those administered prices are going to remain on the front foot. Energy is another case in point. But it does come in an environment, and I'm keen to try and sort of find some silver lining. It comes in an environment in which, for the foreseeable future, if growth is muted, at least inflation is also muted. So we're not being sort of punched on both fronts.
I think that is what they call grasping at straws, Adrian. It was a bad news budget, wasn't it? It was delivered with a lot of, just to get your general sense of the maiden budget delivered by new Finance Minister Tito Mboweni, delivered with a lot of confidence and gravitas and his no-nonsense style and some good wit and repartee with the rest of the House. But if you read between the lines and through the lines on this, there is literally just no more wiggle room for government from here. We saw huge slippages on the fiscal side, and I did a quick calc on exactly how much we're going to be spending in the outer years here in 2022-23 on interest payments alone every day, over 700 million rand every day. That one line item alone is more than what, if you look at the total interest bill at 250 odd billion, more than what we spend on education. We are really, if we don't get the economy growing, in a real debt trap and a hiding to nothing.
Yeah, so, dare I say it, it's effectively sort of 2 or 3 Nkandlas a day, if we take your number. And it is by far the fastest growing line item. The budget points to interest bill growing at 10% per annum over that forecast period. So it's by far the fastest growing line item, and we really need to get the debt down and the growth up. You're having a jab at me looking for silver linings, but I do think there are some silver linings. That's not the way the market has read it. And the two great places to go for guidance are the rand and the bond market. And the rand was marked down fairly sharply, 30 odd cents to the dollar. And the bond market, the 2026 bond was pushed up about 10 basis points. So the bond market didn't like it. I don't think the ratings agencies are going to like it. We really are on borrowed time here, to take your words. But there is prospect here, and there's prospect to turn this confident talk into action. And I think it is about capping the wage bill, the public sector wage bill, carving out all of the excesses in places like cabinet, and getting effective delivery and funding injected into the state-owned enterprises. Put those together and get the private sector to get their hands out their pockets and start investing. We could actually be having quite a different conversation this time in a year.
Well, let's hope all of that does come to pass. Adrian, Saville, founder and CEO of Cannon Asset Managers and Professor of Economics, Finance and Strategy at Gibbs, with some of the wealth and investment impacts of this year's budget.